Hi, students. This is chapter 5 for payroll. And what we are working on is we're going to take a look at matching and review for chapter 5. All right, so I am sharing my screen. I'm going to take a look at Cengage. Take a look at chapter 5 matching and review. Hopefully you guys have attempted this already. If you haven't, please stop the video and go ahead and attempt this. Otherwise, we're going to go ahead and take a look at this. Okay. First, we have matching. There are going to be 22 matching and review. Reciprocal arrangements are they provide unemployment insurance coverage and payment of benefits to interstate workers. Title VII advances. Those are borrowings from federal government to pay unemployment compensation benefits. Negative balance employers means employers whose reserve account, that means the money they've been paying in for unemployment, has been charged with more benefits than the contributions that they put into the account. Dumping is poor experience rated companies form new companies with lower unemployment tax rates, and over 500 is the quarterly threshold for mandatory depositing of FUTA taxes. Okay, next, more matching. We have merit rating. Merit rating is favorable employment records result in lower state unemployment tax. The 940 is the annual federal unemployment tax return. Household employers, they have to pay their FUTA tax with a Schedule H of a 1040. Wage information reports are quarterly reports submitted to the state listing employees' social security numbers and taxable wages. Voluntary contributions, extra state unemployment contributions made by employers. Next question. Under FUTA, a person or a business is considered to be an employer for which of the below mentioned conditions? It's either one of these. If they employ one or more persons, or at least some portion of one day in each of 20 or more calendar weeks during the current or preceding taxable year, or if they pay wages of $1,500 or more during any calendar quarter in the current or preceding calendar year. The next question is about household employers. A household employer is covered under FUTA if during the present or previous year the household employer paid $1,000 or more during any quarter for household services in a private home, college club, fraternity, or sorority club. The next question. This is the services performed by a student for the school where he or she is attending college are exempted from FUTA coverage. So that means that's not covered. Number 6, under the Interstate Reciprocal Coverage Agreement, the services of a worker can be covered in the state of the election of the employer under which of the following conditions. And that would be any of these is correct. So that means that an employer can kind of pick and choose which state they're going to do for coverage. The employer has a place of business in that state, the employee performs work in that state, and the employee lives in in that state. Okay. Number 7, FUTA coverage includes service of any nature performed outside the United States by a citizen of the United States for an American employer. The major exception is service in any adjoining countries with which the United States has an agreement relating to unemployment. Question number 8. Which of the following types of payments are taxable under FUTA? Commissions as compensation for covered employment and dismissal payments. Number 9. To obtain the maximum credit of 5.4% against the FUTA tax, the employer must make 2020 calendar year state contributions on or before what date? That date is February 1st, 2021. An employer, because of a favorable experience rating, is permitted to pay a state contribution at a reduced rate of 1.5%. What percentage of taxable wages must be paid in the aggregate to the federal and state governments? And the answer is 2.1%. All right, the next question is, under which situations can an employer be liable for a net FUTA tax greater than 0.6%? So this is where they don't get the most favorable rate. And this would be an employer located in a state that has not met the repayment provisions of Title VII. Oh, you know what? I apologize. It's both. It's if the employer is late in paying in their state contributions, and also if they're located in a state that did not meet the repayment provisions of Title Title 12 advances. Excuse me. Both of those are correct. Number 12, the purpose of Title 12 advances is to provide funds to states that cannot pay their unemployment compensation benefits. All right. In 2019, we'd have to take a look at our state table here. Arkansas had the widest range of SUTA tax rates for employers, and Massachusetts paid the highest weekly maximum benefit to qualified and unemployed workers. And Washington had the highest taxable wage base for SUTA tax. Number 14, how is the SUTA tax rate determined for a new employer? It is each state sets an initial contribution rate of not less than 1% for a specific period of time. Number 15, an employer who is subject to FUTA must file Form 940 with the federal government. Normally, the form must be filed by February 1st. However, if all deposits are made on a timely basis, the form can be filled out by February 10th. The total taxable wages are computed by deducting exempt payments and wages paid to each employee in excess of the magic number 7,000 from total wages paid for the year. Number 16. In part 2 of the 1040, I'm so sorry. In part few, I can hardly speak. In part 2 of the 940, contributions made on a pre-tax basis to a cafeteria plan would be located on lines 4 and 6 as part of the subtotal. Number 17, how does an employer file an amended 940? What they're going to do is they're going to complete a new 940 and they're going to check the amended box and include an explanation for refiling. Okay. Question 18. For a company that has ceased operations during the year, a company going out of business, what must the employer do? They must check the appropriate type of return box on the 940. They must attach a statement giving the name and address of the person in charge of the required payroll records. Both of those are correct. If the employer's FUTA tax liability exceeds $500 at the end of a calendar quarter, the employee must pay the FUTA tax on or before the last day of the month following the end of that quarter. The employer is required to deposit FUTA taxes electronically with the EFTPS system. This is the same system that they use for the 941 information, which is the federal income tax withholding and the Social Security and Medicare. How often do employers file wage and contribution reports with their states? That's going to be quarterly. And finally, separation report may be required when a worker becomes separated from employment. It provides which of these pieces of information. It'll give them their wage and employment record, and it will provide the reason for leaving. All right, so that is the matching and review on Chapter 5. Thank you so much for your attention.